It's about that time of day again. My name is Joseph. Thursday evening, January 11th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is bearish after collapsing off today's high. Quite a wild ride on the black gold. And I'm looking for a hidden channel or a possible spike in channel for the most reliable selling opportunities on Friday. S&P is bullish, along with all the other E-minis right now. And we're trading at the high of a channel on the S&P. So I'm waiting for buying opportunities using a two-legged pullback down to a key reversal line at 65.5 tomorrow morning. Speaking of tomorrow morning, Nasdaq is also bullish with a big multi-day bull channel. This tells me to use channel rotation for two-legged pullbacks and buying opportunities coming off the lows tomorrow. Gold is also bullish with a big spike in channel pattern, telling me to stay patient for a pullback down to the base of the channel on Friday morning. And Friday morning, euro is bullish with a big spike in channel pattern of its own. I got some concerns about the euro, though. Tomorrow's a Friday, which means we have some key levels we're watching. We'll talk more about that in just a moment. But the euro, waiting for a two-legged pullback. I'd like to see it down into my battle zone tomorrow morning. Tomorrow's a Friday, wrapping up the second week, the first full week of the month. We're going to have another great session on Friday. I get another great newsletter in store for you guys and gals tonight. We got a great strategy for tomorrow. We got some important levels to be watching, and we just might do some teaching along the way. Before I jump into charts, though, and put the plan together for Friday's session, I want to remind you, if you're on the YouTube channel right now, make sure you subscribe to the YouTube channel while you're here. Give me a thumbs up if you like the video today, and don't forget to click that little bell icon to make sure you always get notified every time I publish a new video. And if you really want to stay in tune with everything we do here at School of Trade and Sideways Markets, head on over to the blog here at sidewaysmarkets.com and make sure you join our mailing list. I'll put all the links in the description of the YouTube video. While you're here, don't forget, follow me on social media. I'm always posting exclusive charts, links, and updates throughout the week on my StockTwits, Twitter, Facebook, and LinkedIn feeds. Exclusive stuff you won't find anywhere else, so give me a follow there. Speaking of charts, how easy is this? All the charts from tonight's video, that's right, you can have them on your computer for tomorrow, right where it says click here to download today's charts. Have those charts ready for your trading session tomorrow. And speaking of tomorrow, what are you waiting for? Grab that free pass, will you? Come out and join me as a guest in our trade room. See what everyone's talking about. We always have such great feedback from you guys who attend that free pass. So grab that free pass in the upper right-hand corner. You're going to learn more with me about my strategy and about how the markets move. More with me on that free pass than you will anywhere else on the interwebs. I can guarantee you that. And if you have any questions along the way, we got live support. I'll have to kick this live support server back on again. I apologize about that one. But usually that's online, right? If it's online, right, hit me up on live support if you have any questions along the way. All right, taking up too much of your valuable time here. Let's jump right in. First things first, what's the schedule look like for tomorrow? Tomorrow's a Friday morning. Tomorrow's Friday, January the 12th. What do we have here as far as news goes? No major news coming out of Asia, so nothing to worry about if you trade in the overnight Asian session. We got nothing to worry about tomorrow until we get down into that 8:30 block. We get consumer prices and retail sales. That's going to be a pretty nice little 1-2 punch tomorrow for U.S. session data. So we're clear in Asia, we're clear in London, and of course we got some, again, big news. Headlining number tomorrow is that retail sales number, right? That retail sales number. We're going to start seeing if all of these retailers were able to survive the first few weeks of the year after the holiday season rush. So that should be a shot in the arm, right, that we'll look forward to tomorrow in our trade room at 8:30 a.m. Eastern time. And a couple things that I always want to remind you guys about Fridays. Friday, the first thing that comes to mind for a Friday morning is early in, early out. Early in, early out. The most important thing about a Friday is remember that traders take bigger risks the later you get in the day on Friday. I know I'm not the only person that did this, but did you ever take a little bit bigger risk at the end of the week to try to make up for some losses earlier that week? I know it doesn't usually end that well, does it? Well, one of the many mistakes that I made early in my career was, doubling down, chasing after moves, trying to force trades late in the day on a Friday because I'd either made a bunch of money already that week and I was trading with house capital, or I lost a bunch of money that week and I was trying to make up for it. Either way you slice it, no matter what the scenario is, you can expect traders to be a lot more risk tolerant, a lot more aggressive, and more desperate, right, as we get later in the day on Friday. Combine that with the typical volume, right, the drop of volume as large lot traders shy away from a Friday, and you have a recipe for some very irrational, very volatile price action. So be careful, right, after 11 o'clock Eastern time. 11 a.m. Eastern time is usually my cutoff on Friday mornings for any new positions. You're more than welcome, right, to hold on to positions into the close. Be very careful, though, with new positions after 11 o'clock. The next thing is that we're going to start watching that prior week open, high, low, and close levels with a lot of emphasis on the closing prices, right? So as we finish up this week, last week's open, last week's high, last week's low, and last week's closing price. You'll see those marked up here on a few of the charts, right? They're not in play on all the charts, but later in today's video when we go over the gold and the euro, you'll see those are going to start coming into play big time. Those will often act as price magnets, right? And so you want to be buying below them, right? Selling above them, making sure we use them as our magnets. And if we can, use them for runner targets tomorrow, which is possible on the euro. So no major news until 8:30 a.m. Eastern time. Early in, early out. Watch those prior week open, high, low, close levels. Most of you guys probably have an indicator that can plot those for you. If you don't, shoot me a message and I'll send you some more details on that. Let's jump right in. We got the news under control here, and let's jump into some charts. Shall we? Get ready for Friday's session. We'll go crude oil, then S&P, Nasdaq. We'll do gold, and we'll wrap up on the euro. Pretty wild ride today across the board, and not just on crude oil. We're going to see some pretty interesting charts tonight. So buckle your seatbelt, get the kids out of the room. It might be a bit of a wild ride. Speaking of a wild ride, what a wild ride on crude today. Bearish now. I thought that market was never going to stop this morning. We're bearish after a wild ride, tumbling off the highs and heading back down to those lows. I would assume back down to that 63.09 area where we came from yesterday. Now, anytime I see a trend reversal, I'm always looking for a hidden channel. So I've drawn the channel off of those lows and I'm pinning it up at the high, looking for a sell, coming back down to that high. Another big clue is the strength of this move going lower, right? See how steep it is, how far away from the moving average we are, right? The strength of this move is also a big clue. I would call this a spike lower, right? A bear spike. And that tells me to look for really one of four scenarios: a spike in channel, a spike in wedge, a flag pattern, a wedge pattern. So we're going to talk about that in a moment as well. No matter what we get in the short term, my plan is always the same: sell at resistance in a bear market. Right now, we're not at resistance, so we're waiting to get at resistance so we can look for selling opportunities going back down to retest those lows. We have to assume right now that we're trying to make it back down to Thursday's low, right, at 63.09. Now, hopefully we'll get a pullback here and we can incorporate some sort of, A, B, C, D move, three-legged move to find a better target. But for right now, that's really all we have to work with. When the market goes up like this and then straight back down, it kind of clears everything out. So we have to give it a little more time here. Now, anytime I see a reversal like this is one of those times where it's pretty obvious, right, this market is reversed. I'm going to take this trend line, copy this down to that low, right, and then pin it right up here at the highs, okay? So that's the creation of this hidden channel. At the same time, there's definitely going to be some falling resistance here coming in overhead, right? So maybe we can use that tomorrow as well. We'll have to wait and see what it looks like when it sets up. The bottom line, though, is this hidden channel is a definite resource for us tomorrow, and I'm looking for a two-legged pullback, right, up to sell off of that high, and of course target will be back down to retest the low of that channel. Again, right, we're going to look for this to be also a measured move, right, for a larger target here tomorrow. Another scenario to keep in mind is the strength of this move lower. Pretty simple. Whenever we have a real strong move in one direction, right, or should I say a spike in one direction, I'm looking for one of four scenarios. So either going to be a spike and channel, right, a spike and wedge, a spike and range, or the always popular flag pattern, spike back down, right, and flag pattern. These are the four scenarios we're kind of waiting for tomorrow. So depending on what scenario we get, they all tell me pretty much the same thing. Sell high. Find some resistance and sell high. On a spike in channel, the resistance is up above the top of that channel. On a wedge, the resistance is up above near the top of that wedge. On a spike in range pattern, the resistance is up above the top of that range. And of course, on a flag pattern, I want to get up above that flag or use that level on the opposite side as resistance. All right, so pardon my chicken scratchings here. Pulled a bit of Bob Ross here with you guys on YouTube, but that obviously is, those are the four scenarios. Here's your chance, grab your screenshot. Those are the four different scenarios. You can always pause the video and go back and see before. I go into a lot more detail on the specifics of actually how to get into these trades, right, in our advanced classes here at School of Trade, but that will give you the basic foundation of what we're looking for tomorrow. So strong move down, up and down. Look out for that spike and channel, right? Spike and channel will give me, right, chance to sell off that high. A lot of times, big moves like this in one day, we come in the following day and we're going sideways, right? That happens quite often. That happens one try, two try, right? And back down in from there. A flag pattern is going to be probably the most difficult of the four scenarios, right? Flag pattern, we aren't making lower lows anymore. We're trying to get up, get above the top of that channel, down, right? Use it and go from there, right? That will be a scenario to keep an eye out for tomorrow. And obviously we'd love to incorporate both of these, right? That hidden channel, right, flag pattern. I mean, that will be obviously ideal, right? Combine the flag, combine the channel for that sell. And again, it all depends on, right, where we go. Because if we keep going lower here, right, we'll just wait for the market to trap high, right? We'll wait for it from there, right? So if it keeps going lower, we'll wait for that pullback, sell high, right? Sell that retracement, sell those rips, if you will, up at levels of resistance. As we go lower, then this 63.78 becomes more applicable, right, as we get further away from it. Right now, it's not a real safe bet right now because you're looking for that move back up to the top of that, right, of that channel. So if price goes sideways, we'll call it a range. Two-try rule outside that range, looking for a sell, right? Let the buyers try once, let the buyers try twice, right? If we go higher, looking for a two-legged move back around the top of that channel for the sell back down. Price goes lower, it'll probably end up being like a spike in channel or a spike in wedge. Look to combine, right, the top of that channel along with some of these swings, right, get her up so we can sell her back down. All right, so pretty simple there. What would it take for the bulls to take this thing back? Three things, right? Strength, pullback, strength. We'd have to see basically we'd have to see something like this. Strong move up, pull back to the moving average, strong move through. We'd have to see another kind of repeat of what we saw, right, middle of the morning session this morning, right? That would be fine. I don't care what direction I trade in, right? A chart is a chart is a chart as far as I'm concerned, but they've got to show us some strength. They've got to show us they want to hold that pullback. They've got to show us they can get through those highs. In other words, the market has to turn bullish on strength here. Then we can start watching that, right, as a new bull channel, right? And then we can look for the move going back up, right, to retest that high. So be careful trying to call a bottom on this. Obviously, very, very strong market right now. Be very careful trying to call a bottom. And then again, if we do get that pullback tomorrow, which I'm sure we will at some point, right, that will give us an idea where that larger target is. Right now, though, you can rest assured 63.09 is a nice, comfortable level for us to be shooting for here tomorrow. All right, on to some extremely strong trends here. Not as crazy as crude oil, but definitely having another big rally day here on the E-mini. minis. The S&P is bullish and trading at the high of a large bull channel, telling me to look for buying opportunities after a two-legged pullback down to the low of this channel. And I would love to use this little 65.50 area, right? This little reversal line on top of that battle zone for us tomorrow. A couple things here on the S&P chart. You can see beautiful rotation back and forth before things started getting a little bit crazy here. Line up those lows, line up those highs. We are up at the high here right now. I want to be a buyer right down at that low, right? I want to be a buyer off of that low. At the same time, we have a prior swing high, which was reinforced a few more times, that has not been tested yet, right? So 65.5 becomes a beautiful spot. Maybe we can combine that with this channel low, right? Down around the low of that channel. That will be relatively easy to see there for tomorrow, right? So that's an important factor, that 65.5 reversal line. And then some targets here for us, right? We got one leg up, two leg, check, three leg, yep. So three legs up, triple measured move up there at, we'll call that 27.74, if you will, right? A little bit of a round number there. So 27.74 for that kind of that triple, right? That triple measured move there, if you will. All right. So what if price goes up? What if price goes down? What if price goes sideways? First of all, we'd like to see that two-legged pullback down into the battle zone, right? Get this low of this channel, right? Maybe we get a trend line coming in here. You know, maybe it looks something like this as it goes lower here. This would be kind of a full sequence, what I call the price action cycle, right? Break, retest, failure, strength, pullback, right, and back up, right? Look for that two-legged pullback, failure, right, pullback there. Those are, right, easy ways to get in. Again, I'm gonna go over in a lot more detail the specific entry techniques that we'll use inside of the advanced class. And then let's see here. That's if price goes lower. What if price goes sideways? You know, again, like I said before, a lot of times we see a real big move in one day. A lot of times this market starts going sideways. If it starts going sideways, this trend line doesn't disappear, right? That trend line doesn't disappear, right? So that's easy. So we'll look for that one try, two try, failure, back up from there, right? We'll look for those buying opportunities below that channel. Let's see here. What else? If price goes higher here, if it goes higher, first of all, anytime we reach a measured move, right? Here was a good example right here. Anytime we reach a measured move, we usually see a bounce and a retest. So if it does shoot higher here, look for that two-legged pullback and a retest. Now, where would that two-legged pullback go? Well, you can take this low, and let's just say, for example, we push through the high here and then we pull back here. You can take that low, draw it up like this, bring that up, right? And that will kind of give you, right? That'll give you a kind of an adjusted, you know, kind of a runaway channel there, right? Or it's a variation of what I call the hidden channel, right? Hidden channels are great because they kind of catch the opposite side of the market on the wrong side of the market. So if we do end up going higher, you know, again, the main theme in a bull market, we don't want to buy at resistance, we want to buy at support. So try to kind of manufacture, right, that support level here by using a hidden channel, which we've talked about a couple times here already. How will we turn bearish tomorrow? Well, we're going on some pretty bullish movement here, right, out of the S&P right now, right? Some pretty bullish movement there coming out of the S&P. So with that, right, you know, rather bullish movement here, it's going to take a lot to reverse this market. But with that said, first step is strong move down. That's the first thing. We need to give the sellers a reason to get excited, and we have to give the buyers a reason to be scared, basically. So strong move down. Second thing is I want to see a pullback to the moving average, right? I want to see it pull back as close to that moving average as possible. Now, when we get to the moving average, people will be looking for a failure to go right back up. So the buyers can easily take that failure back up. It's one of the easy patterns we teach here, right, at School of Trade. The problem is, though, is if they can hold that low, if they can hold that pullback and start making a lower low here, it's all about the personality of the market once we make that lower low, right? Sometimes what happens is sometimes it makes that lower low and it kind of sits and it kind of sits and it kind of sits. That's not a reversal yet. What you want is you want to see absolute pandemonium, right? You want to see the market just completely collapse, right, in the form of the personality, right? You want this to feel like every buyer and their brother-in-law all got out of their positions. Buyers that get out of their positions, they become sellers. It will be very, very violent. It'll be fast. It'll make you want to jump in. Don't jump in though. What I would recommend is draw a trend line off of these lows, put it right up to that high, right, and then look for that sell up around that high, right? So again, you always want to be thinking a couple steps ahead of time just so you have your head on straight when you get there. You know, the best traders in the world, they have plan A, plan B, plan C, and all they do is just see, okay, what are we getting? Which of those plans should I execute? And the most experienced of traders know that when we don't have the plan kind of formula developing, you know, if we're doing something that doesn't quite make sense yet, just wait until it makes sense. I'll tell you, some of the most valuable advice that I got many, many years ago from a good mentor of mine was that, you know, 75, 80% of the day, you, like everybody else, is going to be thinking, what's going on right now? But it's those 20% of the day where you go, oh, I know what this pattern is. I've seen this before. I've seen this scenario before. I know what this looks like. I've done it a million times. That's when you take those trades. Right? You know, trading really should be called waiting, right? Because that's a lot of what we do. A lot of what we do is we wait for those puzzle pieces to move around and go, boom, got it. And then we, of course, have the confidence to execute, right, with the right mindset at that point. Okay, so you get the plan for tomorrow on the S&P. Very similar scenario here on the Nasdaq. Nasdaq is pretty darn similar here as well. We have this wicked long channel here, if I can go back to my New England roots, right? This wicked long channel here coming off these highs. See, we're testing that high here right now. Take that channel, copy and paste it down to that low, right? And there's the low of that channel there. We also have a pretty useful rising support trend line, right? It's pretty much the only real useful rising support trend line on the Eminis right now. That will line up with, right? It's that support trend line. Then we have this bad boy. Right? Very similar on the S&P. We have a very obvious high that has not been used as support yet. So that high there, we'll call that 66.98, right? Combine that with this little pullback area, and really this whole area here could be marked up as my battle zone. Now, the reason why I call it the battle zone is because when we pull back into this area, it's going to go below the moving average, right? There's the moving average. It'll go below the moving average, and what it will do is it will confuse people. Buyers will start thinking the market's trending lower. They'll start selling. Sellers, right, will try to sell the pullback, right? So what happens is it ropes in. This is why I call it the battle zone. It ropes in all the inexperienced traders and all those aggressive traders, right? Not necessarily inexperienced traders, but all the aggressive traders who are trying to reverse the trend. Well, the reality is if you look left, you can see it's going to take a lot more than a pullback below the moving average to reverse that trend, right? So what happens is sellers try to sell. Again, the rookie traders out there, I was one of them at one point, right? I'm still learning new things every day. You should be too, right? Rookie traders jump in short. Aggressive traders get in short. But once we start seeing this market take off to the upside, what happens now? Well, the aggressive traders, they're going to cut their stuff early, right? They'll get out. And all those rookie traders, the ones that got in short in a bull market, what are they going to do? They're going to probably reverse their position. Don't do that, by the way. It's a very bad idea. You know, they shouldn't even offer a reverse position button on your trading dome or your chart trader, right? It's one of the worst ideas you can do, because in my opinion, when you reverse your position, you clearly don't know what you're doing, right? Because why were you going short in the first place, right? So that's the whole thing, right? If you find yourself clicking on the reverse position button, something tells me there's a negative correlation between the amount of frequency you click that reverse position button and the P&L, right, in your trading statement. All kidding aside, and please don't take that personally, get out of the habit of reversing your position and get into the habit of admitting you're wrong, updating your journal, right? Having that flexible psychology, right, that I talked about, and then wait for that next trade. Because while most traders are reversing positions when the price goes higher, what happens is nobody wants to buy up here. They wait to buy the pullback, right? It comes back, stops out all the reverse traders, right, just to see it go right back up to retest the high. It's a vicious cycle. It's completely absurd, and it makes very, very smart, hardworking human beings look like absolute fools. Trust me, you're not alone out there. We all go through that process. So obviously, I've kind of painted the picture here. What if price goes up? What if price goes down? What if price goes sideways? What I'm looking for right now is a pullback and a retest of the high. That's what I want. If we can go through the high, then we'll look for the top of that channel again. But really right now, I want a pullback, right, and a retest of that high. If we can go through it, then I'll worry about going up to the high of that channel from there. So price goes down, watching that two-legged pullback. Maybe it's a nice deep two-legged pullback into a failure, strength, pullback, right, and then go back up. Again, objective is go back and retest the high. Okay, from there, that would be if price goes lower here. Obviously, want to use this trend line, want to use this battle zone. This whole area here, right, is a sweet spot. What if price goes sideways here? We could definitely go sideways tomorrow. It's the end of the first full week of the month. I wouldn't be surprised tomorrow if it's relatively low volume. It kind of felt like that a little bit today, which is the reason why the market moved so much. It was a little bit lower volume today overall. But the bottom line though is going sideways here, bull bias into a trading range. Right? Don't freak out. Don't buy high. Wait for it. One try, two try. Look for a two try rule, and I talk about this a lot on my videos here on YouTube. If you haven't seen the two try rule video yet, go back, use that search box, find that two try rule, but wait for that two try rule. Right? Let those sellers try once. Let them try again. Right? They're coming right into support here at this point. Right? And we can be a buyer off that. Right? Off that second try failure. What if price goes higher, right? What if price goes higher? If price keeps grinding higher here, I'm really not going to change my opinion. I'm still waiting for a pullback, right? Except now my battle zone will be a little bit higher, right? Obviously, we'll try to incorporate that guy right there, right? To get off that guy instead of off of this guy here. If it just runs, right? Like we talked about earlier on the S&P, take that, right? Copy and paste it. Right, and then bring it in off of that low, and that will give you a revised channel. That looked horrible, by the way. Let's see if I can draw it again here. Right, so draw it up off that high, pin it back down. Right, and again, it'll give you more of a updated look at that, right, at that channel. All right, guys. As always, how do we turn bearish? Strength, pullback, strength. I would say we definitely have to get it below this. Right, battle zone. I would think that's going to be a must. That would be a prerequisite here tomorrow if we're going to see this thing reverse here. Right, strength, pullback, strength. Wait for it to come off of that low. Copy and paste. Right, and then two-legged pullback up and look for that sell right back down again. Easy peasy, right? Easy peasy. Actually, it's not easy. It's not easy because when the market drops like this, it's going to take all of your energy to not touch the buttons, all right? And I don't care if you need handcuffs or duct tape or a shot call or whatever it takes, but we want to sell at resistance if the market turns bearish. We don't want to sell as the market drops to support. Let's keep going. How about some yellow metal? Ooh boy, this was an ugly one today. You might want to get the kids out of the room for this one. This is a bit of an ugly one here. A little PG-13 on this chart. Not a very pleasant looking chart. You can see it was a pretty nasty session today. Gold, of course. Right, we are bullish. It's a spike in channel pattern, and that spike in channel pattern, as we've talked about already tonight, tells me the most reliable buying opportunities will come after a two-legged pullback into the base of that channel. Right, so boy, there's not a lot in this chart. You can see the clues here aren't that many here. I think the big clue right now is the prior week close. We talked about this earlier. As we go into the end of the week, the prior week close starts to act like a magnet, right? You can see we are no stranger to that prior week close in the last 24 hours. So, don't be surprised here if this thing ends up kind of evening out around that prior week close as we head into what is a long weekend. I almost forgot about that, right? We got a long weekend here. Got an MLK holiday on Monday. So bottom line is the prior week close, right? That will be a price magnet tomorrow, and we really have to just see kind of how the market reacts to it. Other than that, big strong move up, right? Pull back, new higher high, take those two highs, paste it down to that low, and you can see, right? They've been loving on that low, right? Every time it pulls back to that low, these buyers just gobbling up right now. We have to assume that almost everyone's already long. They had a chance to buy that pullback, buy that pullback, buy that pullback, buy that pullback, right? Like a broken record. We have to assume that pretty much everybody at this point is long this market, right? They wouldn't be short, that's for sure. So what happens, guys? What happens when everyone's already long? What happens? It leads to pretty sharp pullbacks, right? Because there's nobody left to buy. A market like gold, believe it or not, is a relatively illiquid market. There's not a lot of buys and sells on both sides of the price. Compare that to a market like the notes, the bonds, right? The Emini, the S&P, that is, which are very liquid markets, right? So this is a relatively illiquid market. So when they run out of buyers, right, to keep buying up here, what's going to happen? We're going to pull back, right? And we usually pull back to kind of check the stops, if you will. Right? Ever had that happen, right? Where you buy that pullback, we stall out up here, and then all of a sudden what happens? The market slams lower, stops you out of that position just to go right back up again. What's happening? Well, they're out of bullets, right? There's only so many bullets in the gun up top of those highs. I mean, how many people are really going to buy at that high? And again, because these are real markets, the buyer, there has to be a buyer up there, right, to keep that price going. So when they run out of buyers, we're going to see this sharp correction lower, and it usually just kind of checks, right? It's kind of a gut check, right? It kind of checks all these initial pullback areas. So look for that little sharp move down. Now, if it's really sharp, which it usually is in a spiking channel, sharp move down, I'm not going to try to fade. I'm not going to buy that first move down. And again, like I said before, if you haven't gone back and watched that tutorial yet, make sure you go back and watch that 2-try rule, right? Because the 2-try rule has so many different applications here. The one example of a 2-try rule would be anytime we see a strong move in one direction, we expect in this case, the sellers to try again. Then we can go out and start looking for, right, short-term triggers on the way up, waiting for the failure, right, to buy into stops. Because remember, as it pulls back, what's going to happen? Sellers are going to try to pile on and reverse it. So when those bears realize they're wrong, what happens? Yeah, they're going to get out, they become buyers, and now you get a scenario where the buyers are buying low, and now the sellers are buying, right? Just pouring gasoline on the fire, right? And it runs back up to retest the high. So that's the ideal scenario for tomorrow, right? That's the home run scenario. 1 try, 2 try, failure, strength, pull back, right? And back up from there, right? So get that market moving lower. You'll also notice I'm trying to kind of get below this prior week close, right? I'm trying to get underneath it because it'll act as a magnet, and I'd rather have the magnet helping me than having it hurting me. What if price goes sideways here? If price goes sideways here, that's your cue right there. We're running out of bullets, right? If we start seeing price go sideways, what's really happening, right? The airplane is right. It's running out of fuel here. There aren't any buyers up here to keep buying, and what's going to happen, right? It's going to have to pull back. Why? Because the ratio of buyers to sellers goes out of whack. If nobody's willing to buy high anymore, now that's no buyers. That's all sellers, right? Price will pull back, right? In a real market like all the futures markets where there's actually a buyer and a seller, right? And you're not just trading with your broker like in CFDs or Forex or binaries. They will, it'll pull back. So same thing, right? 1 try, 2 try, right? And then back up as well. Don't be spooked if it's really strong. Just wait for that second attempt. If it's really strong going down, wait for that second attempt, and then back up. We go from there. If it keeps going higher here, right? If we keep going higher here, and the market feels like it's hungry for more, find those swings, look for that trap, right? And get that trap low, right? So if price keeps going higher, right? I'll start looking for this as a new channel. right? Be flexible with our, right? Keeps going higher there, pull back, right? And grab it off that. Okay, so we'll see how the market plays out. Again, be ready for A, B, right, and C. How do we turn bearish? Strength, pullback, strength, right? Strength, pullback, strength. You'll probably see it come back, hit that prior week close, and run. Line up those two, bring it up to the high, bada bing, bada boom, right? And you're back down, right, to retest that low. Okay, so hopefully tomorrow I'm going to be pulling for you, gold. It was a pretty ugly session today, right? But we'll see how tomorrow looks here as well. And how about some euro? Euro is the definition of going into the end of the week. We got prior week levels everywhere, right? Euro is bullish, clearly bullish, and trying to retest the high of this spike and channel pattern. But it looks like price action is getting pretty comfortable around this prior week close ahead of the weekly close tomorrow, right? Ahead of Friday's session. So my plan is pretty simple. Look for a pullback, right? Down to that battle zone, right? That little gut check we talked about on the gold, right? That will be where the most reliable opportunities are. So a couple things here. We got the big round number, that 20,000. We got a strong spike and channel. Right? This spike in channel has a pretty big channel on it, right? So kind of the gut check is down, right, at the base of that channel, right? Gut check and then back up, okay? Now, remember, anytime we have a strong move up, two-legged pullback, target is what? To retest that high. So there's my target there, right? Retesting that high. That's the goal right now. What else do we have here? Prior week low, prior week close, and then wait for it, prior week high, right? So there's going to be a good juicy target just shy of that 21.5 area, 21,400 area for us tomorrow. So what if price goes up? What if price goes down? What if price goes sideways? Well, it's a bull market. We'd love to see this market go lower. I have a falling resistance trend line, which although it looks like it did, I don't really think it hit that trend line here. So two-legged pullback, down in, failure, strength, pullback, and back up. As you can see, we kind of incorporate the prior week low, incorporate the battle zone in there. That would be wonderful, right? If we can get that nice deep pullback, two-legged pullback, failure off the moving average, right? And then breakout pullback back up to where? Yep, to retest that high. Once we get through that high, right? If we get to the high, big if right now. If we get to the high, we're eyeing that prior week high. If we go higher to the high, we'll grab a look at, something like that, right? And then we'll use the larger channel combined with that prior week high, right, as our target. Pretty simple, right? Pretty simple there. Just got to think ahead of it. Now, what if price goes sideways here? This could easily end up back to retesting the high, but not go through it. If that's the case, this becomes a bull market with a trading range. It's called a spike in range. One try, two try, and then back up we go. What if price goes to the top of that range, right? How would we trade that? Get the moving average up. Strong move up, two-legged pullback to be a buyer, right? Use the top of that range, get the moving average above it. What do I call this again, guys? I call that the fake out, breakout, pullback pattern. We talked about that earlier this week, I believe, as well, right? So that'd be the pattern if we're looking for a breakout to the new highs, right? Off a sideways range. And let's see here. What if price goes higher? If price goes higher, we know we're looking for that move back up. There isn't a lot of incentive up here right now. Right now, if I was to enter long right now, my reward would be here, and my risk would really be here. It really wouldn't be a great risk-reward ratio. The only other way to do it would be, right, to see it go up, and then look for a little trap low, right? A little trap low. Your stop will go below that low, right? Then your risk is here, right, and your reward is there. That's a much better risk-reward ratio. Right. That's why when a market tries to retest a high like this, you'll see these big wicks, right? And these candlesticks. Every time the market goes up, right? Nobody wants to buy up here, so what'll happen? It'll pull back. Buyers come in, right? And they want to take it back up, right? So don't buy too close to the high because your risk-reward ratio is now out of whack. Last but not least, how do we turn bearish? Yeah, strength, pullback, strength, right? Strength, pullback, strength, strength. Pullback strength, find that new low, pop it onto the highs, right? And up we go, back down again. Pretty simple. This euro, though, remember, those prior week levels, they may start acting up tomorrow. So if we come in tomorrow morning, 7 o'clock, 8 o'clock Eastern time, the euro obviously opens up around 3 o'clock Eastern time. But if we're seeing the market by the time we get into the U.S. session tomorrow, if we see this thing hanging around those prior week levels, we got to be really careful, right? Because we know they're going into that holiday weekend. Speaking of holiday weekend, almost forgot, that's right. Next Monday, the 15th, is the Martin Luther King Jr. holiday. You will see markets, right? Markets, I believe, are going to be open. I'll double check the CME Group website. You always want to get in the habit on the holidays. Go to the CME Group, right? Go to their website and look at their holiday calendar. I am unfortunately not prepared for this, right now. But if you go, just type in Google, right, CME holiday calendar, and you'll see they have a little spreadsheet there they'll give you, and it will tell you if the markets are actually closed on Monday. Monday is a holiday here in the U.S. It's Martin Luther King Jr. Holiday here in the U.S. So banks are closed, schools are closed. It's going to be a relatively low volume environment that Monday. Markets, I want to say markets are open. I should know this by now. The problem is, sometimes these little half holidays. I say half holiday because not every state observes MLK Day. There are states out there that, for some crazy reason, just don't observe it. Right. So it's a federal holiday, which means, of course, markets, even if they're still open on Monday, will be very, very light volume. So if you do choose to trade on Monday, right, be careful. Check the CME Group holiday calendar. See if it says close, because a lot of times these little tiny holidays are closed for whatever reason. But I believe the markets are technically open electronically on Monday. I'm going to be off on Monday. I'm working on some new stuff for our clients here at School of Trade. So my next newsletter will be on Tuesday, January the 16th. All right. If you don't want to wait around that long, right? If you can't stand waiting around that long for the newsletter or to keep working with me, don't forget, you're more than encouraged, right? The best investment you'll ever make in your trading career is going to be joining that free trial. If you're on the YouTube channel right now, I'll put all the links in the description of that YouTube video. Follow that link. Join me here on the website at schooloftrade.com. Join the free trial. Learn my trading strategy. I'll send you a free pass to our trade room. While you're here, learn more about our beginner, intermediate, and advanced classes. And don't forget, I'm always here to answer questions 24/7, 365. Hit me up on live support. Hope you guys had a great week out there. First full week of the month of January. First full week of the year. Are you exhausted? Right? I'm kidding with you. Hopefully you get some gas left in the tank because we get a big session waiting for tomorrow. I'll be in our trade room tomorrow morning, 8 o'clock Eastern time. Look forward to seeing you there. If not, we'll do it again, same time, same place on Tuesday evening. Don't be a stranger, guys. Keep in touch. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.